and lesson, going over a couple of trades that we took here today. And I think the main lesson, the bulk of the lesson here for this evening is some people don't seem to understand why I trade a certain way, why I get in and out. And a lot of new traders or inexperienced traders will call this scalping. It's not about scalping at all. I don't scalp. This is different. It's about being more of an incremental trader. And no, that's not semantics. There's something very different going on there. And the reason why I do this is, and it's going to look, if you go back over the past, I don't know, 6-9 months, this is how we've been trading. And the reason for that is it's the volatility in the markets. Take a look at SPY. Take a look at SPY, and you could even take a look at Q's chart here. Is this a chart you want to hold all day long? How are you going to do that? That roller coaster is such nonsense that why would you want to hold something like this all day long, right? And the whole market looks like this right now. So instead of getting involved in some sort of like whirlwind roller coaster of a ride, get in, get out, trade to targets. It's about trading professionally. It has nothing to do with scalping. I can always tell a trader's level of experience by the comments that they leave. And generally speaking, those comments, when they're leaving comments like that, it's like, well, this guy really has no idea what he's talking about. He's very new to this. And instead of, typing a comment, if you don't understand something, instead of making a statement, ask a question. That's always the best way to go about it, because again, most people are having a very difficult time in this market, and this market isn't difficult. It's if you trade it a certain way, if you trade it more in a trading style where you're holding all day and you're looking to capture full moves. Oh yeah, you're going to have major problems. You're going to crash and burn. So it's about being an incremental trader right now. Hey, Joel, what's up, buddy? So let's get into the actual trades. First off, let's talk about Q's. Q's was an absolute banger of a trade. This was right dead nuts to trade plan. And the one thing that I did say about this is, even though we are going to go long, if you take a look at this daily chart, this isn't a chart to go long on. It just isn't. We're extended. Volume for the past few days has been well below average volume. That tells you that the volume is drying up. Now, the only way that this is continuing to close up at highs or over, and it's kind of closing green, that's due to the fact of shorts getting squeezed. A bunch of shorts pile in the morning or on these range opportunities, and then they get squeezed out. That's going to happen about this point on every single chart that you see like this. That's how markets go up. See, a lot of new traders as well, they have a tendency to believe that markets go up due to buying. It isn't. The only buying pressure that actually happened is down here into technical support. Now, that's caused by institutional as well as retail volume buying. Who the fuck is buying up here? If you think people are buying, not day trading, buying these stocks when they're up at all-time highs, you don't know what you're talking about. You're a fool. The only way that they continue to go up is through short squeeze, folks. Okay, this is something that I've been talking about for the past 8 years. And some people listen, some people don't, but that's what goes on. So what we look for are ranging opportunities to understand where the squeeze is coming in. Or if not, then we look for quick shorting opportunities, which we took as well here on SPY. But let's go over Qs. So again, I wanted to go short on this. And one of the trade plans on this, if you follow my mouse, because I don't have a pen tool here, I wanted it to actually slice through the previous close. So slice through it, pop back up, bump its head. That's the short we want, because then we would be able to capture it down into these moving averages. But even though that's what I want, that's a trade that I want, I don't know what this market is capable of. And if anybody says that they do, they're full of shit. So on this, I am still going to take this long. Now, mind you, it's going to be done with small size, because as you can see, from my entry down up to highs, all the way up into target on this, I locked in $1,295. Now, that's a lot smaller than my usual P&L on a trade, especially if I'm capturing it the whole way up. But that's due to size. I'm protecting myself and protecting my risk via size, small size. So like I said, locking in $1,295 on this trade, absolutely beautiful entries. Traded it twice as it coming down into my starting point, which is right here. Paid myself back into morning highs. and then waited for the next opportunity to come right into the previous close. So that is the first trade or first couple of trades. Secondary opportunity here was on SPY, and you're going to see this green level. Now, keep in mind, all of these levels are placed prior to 9:30 a.m. In fact, they're placed sometimes even in the evening prior to. So you can see, and I'll get zoomed in on this here, that green level top ticked. Now, there's a reason for that. That is not to go full size on, okay? So on something like this is a starter position, but I am expecting it to go up into this level, which it did. Now, it broke that level, but that is well within acceptable tolerance of risk. So we had two massive shorting opportunities at this trade plan. Now, this first one, you'll see I started edging in a little bit early. So as it breaks these highs, I ended up snapping my crosshairs, and I took a look that it was getting pretty close. Even from where I started in, going all the way up into this top level, that is only 1 point on a $560 stock. So I'm okay with starting in there. So I started nibbling in on this, and then once I saw that confirmation, I absolutely hammered it. Once I see those opportunities, even though I wanted this upper level, I am seeing what I am wanting to see. Therefore, I will apply pressure. So locking in $11,400 on this trade straight all the way back down into the previous close. Absolutely beautiful trade, and all done within the first 45 minutes of the market. Locking in that type of money each and every day, and only trading for the first half an hour, 45 minutes, sometimes up to an hour of the market. Now, that is something that I do not take for granted. I understand that I am in a very privileged position that was brought to myself upon, hard work and dedication and discipline and all that fun stuff. But the ability to do this day in and day out, and then to show people how to do it day in and day out with a 92% success rate. That's what the success rate is in Tricktrades at the current moment. And yes, if you're part of the Size Up program, that is the percentage of traders in that program that are consistent and profitable over the course of since we started this. So if you want to learn how to become a professional and consistent, profitable trader, come to tricktrades.com. If not, if you're doing anything else, you are selling yourself short. How can you turn down a 92% probability of success? Those types of numbers don't exist anywhere else. And yes, those numbers can absolutely be backed up. So come join us, and we will see you later, folks. Adios.